Welcome back in. If you have a 401k, an IRA, or a portfolio, recent volatility might be testing your risk aversion, that's for sure. When markets are down, many are tempted to rebalance into safer investments, but is that a good idea? Financial expert Dr. Stephanie Yates with the UAB Collat School of Business joins us now with some important tips for you. Good to have you with us this morning.
Thank you for having me.
Yeah, certainly. I mean, like the Dow closed yesterday at 46,584. For perspective, it was over 50,000 before the U.S. military action in Iran. But with that agreement now, it has bounced back about the Dow futures 1,300 points. But when people hear that, when the markets are down like that, the temptation is, I don't want to look at what's going on there. Others to make some changes. So talk about what they should do. How should people react?
Stay the course. So if you are invested in the stock market, you should already have an investment strategy or a plan. And that plan, it's not going to be bulletproof, but it should allow for fluctuations because this is normal. Uncertainty in the markets is normal. So don't try to time the market.
So if you get emotional and you say, oh my goodness, I'm in a panic, the sky's falling and I'm going to put everything in safer bonds or money market funds, is that a mistake long term?
Typically, yes.
Okay.
Because again, that's a timing reaction. That's a knee-jerk reaction to something that's happening right now. So what that means is that you don't have a plan that can withstand market fluctuations.
And that plan should be long-term, obviously.
Yes.
So if you do stay the course, I guess history shows you're going to make money because of compound interest, right?
Yes.
And
yes.
you're buying, when the market's down, you're actually buying shares at a lower price?
Yes. So what you may want to do is rebalance, but not necessarily getting into safer, like moving out of stocks and into bonds, but thinking about the value of the holdings that you have and maybe buying a little bit more if they're cheaper right now.
Yeah, get a lower price. When it jumps back, you'll take advantage of that.
That's
now,
right.
The uncertainty is normal, but now if you're close to retirement, should you be taking a different approach?
Well, you also want to think about your allocation. So as we get older, our portfolio should get a little bit safer.
Okay.
And so when we translate that into allocations, that means that as we get older and we are more conservative with our portfolio, we should have a lower and lower percentage of our assets in stocks or riskier assets and more in bonds. And so when markets are volatile like this, you might want to consider just checking to make sure if your allocations make sense for this stage of your life.
That is good advice. And the percentage should be what, about 30 in stocks at that point, 70 in some of the safer stuff?
You know, some people use their age.
Oh, okay.
But that tends to be a little ultra conservative, so
Okay.
it really depends on your tolerance for risk.
All right, that is good perspective. There from Dr. Stephanie Yates. We do appreciate it. Thank you.
Thank you.
All right, now this just ahead.